This is George with the Harmony Trading System coming to you from our offices in Frisco, Texas. And let's start our daily analysis. Fast and furious, this market. That's what we can see here. We had a very nice gap down and a run very close to the 80.69. And we're talking about NASDAQ 100 right now. And that was a great opportunity for us. We were short on Thursday into that day, and we ended up pocketing some money on some of the trades that we had, and we're still holding on to some a short in NQ. We're working on a bigger trade. We are right now in channel number 2 in this downward turn. We're coming into high basically a resistance, a very heavy duty resistance level in and around 84.23 and a quarter. We're going to experience a bit of back and fill in this area, and this market is very susceptible to going back into channel number 2, and that retracement can take you to 8,000 and eventually to retesting this gap down that was generated between 76.62 into 77.55. What's important for us to see, and we need to be cautious of that behavior, is how we were trading in globacks with a heavy selling pressure. Then once the market started to open up, we ended up buying this market up to a full reversal. Whenever you see behavior like that, that is a sign that there are still buyers in this market. That doesn't mean the market is gonna run up to the all-time high in a V-shaped, but I'm saying that there is a bit of a push to the upside, and that could take us to those heavy-duty resistance level that we're talking about into the 84.16, and potentially it could be even further up from there. But I'd rather in this level be cautious, defensive, and I'm not interested in trying to buy this market on a long-term perspective at these high levels. I'm actually trying to position myself for a reversal into the mean, which is around 8,000. As far as important levels to look at, let's just take a couple of them. 84.20, 84.89. Those are two areas where we want to see the price fail. Then if that fails, then we're going to see 83.27, and then we're going to start looking at 8,200 as an area where the price needs to kind of come into that idea or into that range. So in this little extension of price action, the cloud is a negative cloud. We are on a trend to the downside, and this price action is vulnerable for retracement. I would like to position myself for the short. I think every trade that I took is a short trade today. All of this is on the 8th, so that's not going to account for what we're doing today. But on the 13th, we went from 2,100 to 5,900, so about $3,800 for the day. We had a couple of good trades short on ES. The majority of our trades were on ES today. Since we're holding on to a short in NQ, we just traded ES for today. So that's a good performance for today, and basically just looked at pockets of selling pressure within this wave, and there were plenty of selling pockets and buying pockets of pressure, and we ended up capitalizing on that. Okay, let's take a look at the other instruments that we have. We are needing to be looking at crude oil. Let's take a look at crude oil. So all the hoopla about oil cuts on the 9th, the market just flipped back in a bear engulfing. And we talked about this in the prior video, and we said that 26.49 is an area where we reevaluate. But some of the comments that I'm seeing on YouTube are saying, oh well, if you wait for till 26.49, most people are gonna go broke by the time they figure out that that level is gonna get there. It depends on a couple of factors. What's your risk tolerance, and the fact that we're saying that's the level in which we, if we pass above it, we will reevaluate to going back to the long. Along the way, we're looking at a 10 to 20 tick risk parameters here. We're not looking. So when we enter these trades, we're not going to enter a trade and put, a 200, 300, 400 tick stop, unless we're building a position and we already are in the profits and we already took some profit along the way. Then at that point, our stops would reflect that. But in reality, we're coming into these trades and we're saying, in this environment, and we're trading under that 26 level, we are more inclined to go short than long. So if you have 10 decisions that you're going to take, I'd rather take 7 of those decisions on the short side and 3 of these decisions on the long side as a scalp with the lowest amount of contract. And I will I would put more contracts on the short side versus the long side. And my risk will be in the 10 to 20 tick range till I start producing profits. Then I'll start adding to these positions. So there's a lot is involved in what we're doing here, but the big picture is we're seeing the river of money flowing out of crude oil right now, and there is serious pressure on that instrument, and that type of pressure can lend itself to a break below 22, and that will lead us to covering the gap that we established on the on the second, and that will be 21.20. And if you start breaking below that, then you're gonna have lower prices into the 20 or lower. So we're not gonna be excited about going long in this instrument. We're more short than long. One level that would be an alert to us is if we break the 24, or 3 if we break the 25.24, and ultimately that 26.54. The short idea will take a pause if we are anywhere close to 25 at that time. Okay, so short till proven otherwise by price action, very tight stops at the beginning, then you adding to your winners and cutting your losses fairly quickly on non-performing ideas. Let's take a quick look on ES. Where's my ES here? Here we go. Let's take a quick ES look. Well, ES and NQ, a lot of them are going to be performing in a very similar way. Anyway, here we go. So we're in the middle of the range on this price action. A break, target number 1 is 28.42.25. You got the reversal. So look what happened here. We came right to that middle of the range at 27.11, and the market bounced right back up. These are strong moves. I mean, the market is trying to make a statement here, and they're throwing a lot of money at it, and there's some good news in the fact that New York is leveling off, and they're talking this thing up. That's what they're doing. Okay, and there's some signs that things could come to an end, not a true end, but at least things are going in the positive direction versus the negative. Now, ultimately, this economy will not truly recover unless we have a vaccine, because the fear of being infected and killing somebody with this infection is going to be on the mind of people as they try to open up this economy. And you're going to have a roll up of opening. So it's not going to like everything's going to open up. It's going to be one of those things where if a state is not affected as much, they may open up some parts of it. So with that environment that we are in, you really have to kind of play a bit of a defensive play. versus trying to get aggressive at these levels, thinking, okay, well, FOMO. I'm afraid I messed up the boat. I gotta get my Carnival cruises stock CCL. I better get some of that before things take off and I miss it. And to be honest with you, you just take a breather. Really do take a breather. This economy got hit hard, and that the stock market is not a reflection of an economy at these stages. It's a reflection of emotions. And right now, you market tanked hard, and you have a bunch of stimulus packages and effort by the government to stabilize it, and there's a bit of a relief rally. But things is going to start sinking in with people to the magnitude of the impact of this on the economy, and you're going to see this pressure on the price. And a lot of the emotions of people having a relief rally is going to start waiting off once some of these earnings will start popping up and people see the magnitude of the damage. So from my perspective, I'd rather be on the defensive side than offensive here. I will buy into retracements and a retest of lower levels. A lot of people asking questions, will the market retest the lows? Well, okay. There is a case to be made for that. Typically, bear markets will retest multiple times. You rarely see a bear market that just does a V-shaped recovery. Okay, even though Amazon did it, and boy, did that just shot up high all the way, almost to the all-time high, close to it. But that's just an unusual company that has its own specific circumstances. Long story short, be defensive on this type of price action. Look for signals on the short side. In ES, we are looking for the shorts to really start taking hold. You really need to continue to trade under 2,800 and definitely below 2,841. So those are the areas that we want to be cautious of. And ultimately, if we break 2712 again, that will really speed up the selling pressure into lower prices. If the market start running up past these levels, I will not go long. I will literally just wait and look for a short signal at a higher price. And that's it. I mean, we're just gonna keep it lean, keep a tight stop. This is a good market to trade. It's a good market to trade intraday. Very lucrative if you catch a position, especially on the indexes in the futures, and hold it for a few days into lower prices. You're gonna get multiple of hundreds of points on a move, and that's what I'm kind of working on with my NASDAQ trade, and looking forward to more successful days. And at the end of the day, always trade in harmony and stay disciplined, stay focused, and we'll see you on the next video.